Today, I want to talk about how Congress will soon override the SEC taking down Citadel. A former SEC chairman gave his top 10 tips for removing manipulative short sellers, and Congress is now working on a plan to take down those shorts, and has also been discussing AMC and MMTLP as well. So stay tuned and let's make some money. And now to dive straight in with the key information. So, ForceHedge has tweeted this video of former SEC chairman Harvey Pitt giving his top 10 recommendations. Now obviously, as usual, I don't want to play this full video. I'll leave it linked in the description below, but I will play a very interesting excerpt.
Now those who've heard me speak before know that I am fond of stating that I have a list of 10 suggestions to solve a specific problem. I do this all the time. First, SROs and the SEC need actively to pursue ongoing chronic and serial short-selling infractions. Next, meaningful penalties have to be imposed for violations of existing Reg Show requirements. Third, the SEC should define and punish as fraud abusive naked short-selling practices.
So there we have a former SEC chairman admitting that manipulative short selling is a massive problem. He said the SEC needs to act faster, they need to punish more, they need to increase the fines and the punishments and determine manipulative short selling as fraud. This is something I touched on in my video yesterday because right now the SEC determines manipulative short selling as nothing more than an administrative error, which it's not, it's clear fraud. And instead of appropriately sending people to jail or banning them from the markets or removing their exemptions, they just issue small speed bump $7 million fines. Now this guy actually had Gary Gensler's position back in 2001 to 2003, but had one of the shortest reigns at the SEC and was removed as a result of scandals. I wonder if that was the real reason he was removed, or if he was removed for trying to stop synthetic short selling. But what is clear to see is that manipulative short selling is obviously a massive deal and a massively widespread problem if even former SEC chairmen are speaking about it. It's clearly not something that doesn't exist or that goes unnoticed, because it clearly is noticed, as a former SEC chairman is fully aware of what happens. It just seems to be ignored. Or rather, the hedge funds pay off the SEC and completely have their free will and free way with the market. I think this is a perfect video to show people that say synthetic shorting doesn't exist, because it clearly does if an SEC chairman is talking about it and saying what a massive problem it actually is and how widespread the problem is. And as I've said, it seems Congress will soon bypass the SEC and actually do something about manipulative shorts. Dave Lauer tweeted saying, "I spent the week in DC meeting with members of Congress, their staff, and plenty of people over at the SEC. He said, "We did talk about equity market structure, abusive short selling, GameStop, AMC, and yes, even MMTLP. He said DC and Congress specifically is paying attention right now to individual investors. He said, "Your comment letters are working and change is happening." He said it might be slower than you want, but we're talking about changing decades of rules. It takes time. Saying every meeting they've remarked about the number of comment letters and the passion of individual investors. And every meeting they want to know what regulatory and legislative changes could be made to make markets simpler, more fair, and more transparent. We know the SEC is paid off by these hedge funds, the shorts and the market makers, and that's why they never really do anything about the manipulative short selling. But it seems maybe Congress could bypass the SEC and effectively take down Citadel, either with new regulations or just take them down via the legal system. I said in my video yesterday how I've pretty much lost faith in the SEC to actually do the right thing, but maybe Congress can take their place. As specifically Batman tweeted, he said the presence of 50 million FTD shares for AMC, particularly while the company was on the threshold list, clearly represents a systemic failure in FINRA's regulatory oversight. As Harvey Pitt was saying, these SROs really don't do anything about the manipulative short selling and breaches of regulation SHO. He said it raises concerns about the enforcement of settlement, market integrity, and investor protection. I personally think it raises more than just concerns. The SEC knew about Citadel's crimes, knew about the mismarking orders, but instead of removing them from the markets and ordering them to repay or disgorge all ill-gotten gains, they just simply fined them a tiny amount. Even though $7 million sounds like a lot for Citadel that supposedly made $14 billion in profits, that's like 0.01% of their total yearly annual profits. It's a tiny fraction, it's a tiny speed bump, and it's effectively ignored by Citadel, who will continue to do the exact same thing and commit the exact same crimes. As AMC tweeted, he said Citadel was charged with market manipulation last week, and the SEC has just retrieved messages from their employees' private devices. But yet Citadel is still allowed to control 40% of all retail orders and hasn't been banned from the market, or at least had their exemptions removed. He said, "Yikes, it looks like the US stock market really is corrupt." But as Trader POS tweeted, he said, "Just remember, even though the SEC has failed us, they have continued to over-leverage their positions." He said as the markets went up, they were still buying stocks on margin. He said this market crash doesn't need to drop much at all before they get margin called. He said a 1 to 3% drop in the market can trigger itself into a 5 to 10% drop or even larger because of margin calls. This is something I've touched on a number of times directly with AMC, as they've pushed their price down more and more over the last 2 years, taking on more and more synthetic shares on a larger and larger leveraged position. AMC doesn't even need to rise much at all before we see liquidations. Before, AMC needed to see $70 or $50 or even $100 to see liquidations. Now, I imagine those liquidations would happen at $15, $20 or $25. So all of a sudden, a very small move retrospectively in AMC can trigger itself into a significantly larger move. If AMC doubled or tripled from its current position, it could very easily end up spiraling itself into the mother of all short squeezes. Something also very interesting is that Bill Pulte, the previous GME elitist or GME enthusiast, now wants to unite GameStop, AMC and Bed Bath & Beyond. Bill Pulte has now said that he's buying a mess ton of AMC shares. This was confirmed yesterday on a live stream with Bill Pulte himself. Bill has previously just spoken about AMC, but on this live stream said that he loved AMC the company, he loved AMC the stock, he loved what they're doing and wants to buy shares. I've always said AMC, GameStop, it's the same thing, we're all on the same side, but many of those GameStop elitists disagreed. We're all on the same side of fighting back against market corruption, and only with everyone working together can we succeed. And with everyone working together, it doesn't matter which specific stock squeezes, because regardless of which stock squeezes first, all stocks will end up following in the squeeze, as they're all part of that same basket. And something that's potentially even more interesting is Highcroft Mining seems to be taking a page from Mullen Automotive's book. Now remember, Highcroft Mining works very closely with AMC, and therefore AMC, Adam Aaron, Diane Garrett will all be aware of exactly what's going on over at Mullen. Recently, Mullen received a delisting notice from the Nasdaq, and as a result requested a hearing before the Nasdaq listing qualifications panel. Mullen also brought a lawsuit against a number of trading platforms and brokers, suggesting the only reason the Mullen stock price is down below this listing requirement is due to market manipulation. And now Highcroft Mining has just requested the exact same hearing before the Nasdaq hearings panel. Clearly Highcroft Mining specifically and Diane Garrett and maybe Adam Aaron and AMC as well think Mullen Automotive are onto the right idea. Maybe over the next few days we'll also see Highcroft Mining starting a lawsuit against these same trading platforms and brokers. I think that would be very interesting to see, because if Highcroft Mining does it, AMC was sure to be close behind. I know previously Adam Aaron hasn't spoken much about manipulative short selling or about synthetic shares. I believe he's doing that to protect the AMC company. We know that other CEOs have said since they started talking about manipulative short selling, their companies have been targeted even more by those shorts. Some of them even wish they hadn't spoken about manipulative shorts because their company is in a significantly worse position as a result. I believe Adam Aaron has been doing his best to try and keep AMC at least somewhat safe from those manipulative shorts. But I also think as more and more lawsuits are started against these trading platforms and brokers, there will soon become an inevitable position when the SEC or specifically Congress has to do something about it. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.